And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Monday, my fellow futures, friends, family, traders. Happy Monday again. It's December the 19th. My name is John Hoagland. Thanks for trusting me with your time. Happy Hanukkah, which began last night, to all those who celebrate Hanukkah. As always, my context, my focus here is going to be on accurate context, good risk management, and remaining patient. Again, I hope you had a nice weekend. I had a real nice weekend. Had the opportunity to spend a little time with my brothers, Tom and Rick. And we had a nice little chat and some lunch, and it was a lot of fun. Made my weekend, so that was always good. Hopefully you had the opportunity to spend some time with loved ones. We got 1 week until the big day, Christmas, 2 weeks until next year. Going to finish up the year strong, I hope, and take a little time and do a little reflection on what you were able to accomplish this year and what you plan on trying to accomplish next year. Keep your goals focus on process and strategy, not necessarily thinking about numbers and times where you're going to demand that you've gotten to certain levels or certain financial goals. You keep your goals on staying focused on process and strategy. The money will take care of itself. One of the best traders I ever knew, he said, you can't focus on getting rich or making money. You've got to focus on making good trading decisions. And he did that, and he always called the money he made a byproduct of being a good trader. So keep that in mind as we go along, and think about that for next year, keeping your focus on your process, your strategy, your homework, your mindset. Hugely important is that mindset. So this morning, as far as economic numbers are concerned, we're a little thin this morning. We've got housing market index, a couple of bill auctions. Tomorrow, more housing information with housing starts and permits. That's going to be a little bit more impactful than the housing market index is going to be today, probably. Wednesday, we've got consumer confidence in existing home sales, as well as the EIA petroleum status report, as always on Wednesdays. Thursday, the final GDP numbers for quarter three. So everybody's expecting them to be just as as the last estimation was. We'll, I'm sure, be checking that out as the week goes on. We also have Thursday, as usual, the jobless claims numbers, as well as the EIA natural gas report. On Thursday, Friday, durable goods orders, personal income and outlays, new home sales, and Michigan consumer sentiment all due out before the holiday weekend. So I don't think by any stretch that the markets are necessarily slowing down for the holidays here just yet. We've got some changes. We've got some things in these markets. We're going to see this on the charts very shortly. And as far as the VIX is concerned, it's up a little bit. $22.78 index, just about flat at 104.66, and the yield on the 10-year on an uptick at 3.56%. It's pretty much hanging around that 3.5% all last week, starting off the same this week. As far as our equities are concerned, we've got them kind of set to open just sharply steady here. We got the Dow down just a little bit, dollar up a point, NASDAQ up 8 points. No major changes in the perception of value of those products here just yet. we've got we're coming off of a couple of weeks, a couple of rough weeks, downside weeks. We're gonna have to see how this plays out this week. Of course, we're not going to get any breaks from economic numbers this week. As the week goes on, more and more important information is coming out. Elon Musk, I guess, pulled Twitter and asked if he should step down as the Twitter CEO, and 57% of the users said yes. Apparently, Tesla is going to be happy to get their CEO back. A nice little pop in Tesla after that came out. Crude prices have stabilized for now. Traders weigh economic uncertainty against Chinese demand. It's going to be a battle for the crude market all week and the coming weeks, it seems. As always, if you like what you see, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. I'm always looking for constructive criticism, feedback, or ideas on improvement of everything we do on these live events. Make sure you subscribe to our YouTube channel so you get notified when we do have those live events. And speaking of live events, this week and next week, there will be no group coaching and no Make Hogue Money. I'm going to miss you all. Of course, I'm hoping you're going to miss me. Maybe yes, maybe not. This week, we will be having the forecast and the recap in its usual spots all week. Next week, no events, no recap, no forecast, no nothing. We'll start back fresh on the Tuesday. I think it's the 4th of January, and with some potential improvements and changes as time goes on. So looking forward to having a interesting week this week. One of the things that comes to mind to me about this week is you really want to manage risk well always, right? You fall into kind of capital preservation days on Fridays. If you've had a good week, you don't want to wreck it on Friday. This is kind of like the Friday of the year this next couple of weeks. A lot of folks have, some profits. Maybe they haven't, but the last thing they want to do is lose a bunch of money before the holidays. And in creating that thought, we sometimes cause them to happen. It's a self-fulfilling prophecy. I don't want to lose a lot of money this week, so we change the things we're doing. We change our thought process, and it's so important to remain in process. Just keep the same thought process. Trade the same way. If things don't go well, you can always shut it down, but try not to change your thought process and your mindset, really. I mean, if you start to think about capital preservation, you're maybe shorten up your stops a little bit. Maybe you start dying by 1,000 cuts. If this is a problem for you as you move through this next couple of weeks, you may be better off just taking the time off, starting fresh at the beginning of the year. You kind of start from zero. The beginning of the year, it's a whole new year full of opportunities. So try not to freak yourself out with capital preservation. I've done this a few times and actually created what I was fearing is, I don't want to lose a lot of money this week, so I'll end up losing a lot of money this week. Just every trade starts from zero. Every morning, every day starts from zero. Stay in your process and see if you can add to some of those yearly profits this week. Of course, I'm not going to be trading a week between Christmas and New Year's. A lot of folks aren't. It's going to be thin. It's going to be maybe a little bit of liquid at times. We don't know what's going to happen. As we always say here on the forecast, anything can happen, ACH. So we just take what the market gives us, protect ourselves, and then we have a nice holiday if you're not in the holiday already. So... All right. Good morning, Dimitar, first in the room. Happy Monday to you, Gnostic, Alex, Charles, Shaw, Naveen. Good morning, my brother, Rick. Love you. Hope you're feeling well. Dark Kevin, Joel MB, Spencer, good morning. Scott Sawney Concord, Terry King, Caprice, Bill Phillips, Caesar, Jimmy Decker, Steven, Alejandro, Adrian, good morning. Vince, my guy. Ron Merlot, you stay classy. Anissa, good morning. Jacob Vandermeer, morning to you. Haggle Matters, good morning. Timothy, George. Yes, she is under the Christmas tree. I feel like putting a bow on her because she is a present for sure. Dijon, good morning, friends. Jan R, ZK, morning all. Finally passed step to very excited to New Year's startup. All right, good job, ZK. It is my pleasure, and it's my hope that you continue to this path of success. We are all looking forward to all of your success. Congratulations, ZK. Marco, Jason, Rob T, good morning, Glitter Sandwich. Caesar, thank you very much. Sarah, thank you very much. Way to go again, ZK. Fred Decker, I heckle with love, of course. I was watching the Bears play. Do the Bears actually play plays in the huddle, or do they just say snap the ball and see what happens? I thought that actually the Bears played very well against the Eagles. I had a brief glimmer of hope. Maybe it's a little hopium, like the market was going to turn my way and I was losing money. But I thought they played them very well. They had a couple of real daggers that kind of sealed the deal, but I thought they played them very well. I mean, the Eagles are a very, very good team. They're all good teams on the right day, though, right? Fred, I appreciate you. Taurus, good to see you. Dijon, Adrian, do we do a lot of people trade the week between Christmas and New Year's? Why do a lot of people? Well, I would imagine, hey, Rational Investor, it's good to see you. And happy holidays, Merry Christmas, Happy Hanukkah, whatever you celebrate, whatever you celebrate. Good to see you. Why do a lot of people trade the week between Christmas and New Year's? Well, I can tell you in the trading pit, a lot of the bigger traders were taking the days off. They were taking time off during that day. And some of the smaller traders that were not up on the top step were able to get up on the top step and trade next to the brokers, get more of the paper. So that's why, traders in the trading pit would trade during the holidays, is it gave them an opportunity to get much better real estate in the pit. Why people trade between Christmas and New Year's on screen? I would imagine some of them have maybe some addiction problems. They just don't want to step away. Maybe they're still chasing money on the year. Maybe they just feel as though they're in a good place trading and they want to keep that going. There's a lot of reasons why people would trade it. And, there's been periods of time when we've had some pretty big moves, the day before or the day after Christmas, and certainly the last day of the year, sometimes we've seen some pretty decent moves. If you catch them, great. Just don't put yourself at undue risk, right? All right. Steven, what is your take on using micros instead of e-minis in the combine accounts as a way of managing risk by reducing size? At least doing this until we build up a buffer. I think it's a fantastic idea. I do. I think it's a really good idea. The one thing you have to watch is it's much more expensive to trade the micros. You're going to have to make 2 ticks to cover commission on the micros. So there is a little bit of that. So you're going to be, trying to, I would think, make a little more on those trades in the micros. If you are a very short time frame trader that's taking a lot of trades, the commissions are going to kill you in the micros. But if you're somebody who's taking bigger bites out of the market, I think it's a good idea. See, that one run Fields had was one of the best all season. Yeah, similar to Hurts last year. He will continue to improve. I agree. I think Fields, as long as we don't trade him away, is going to end up being the quarterback we've been waiting for. Why does it always seem like the Green Bay Packers end up with like these great quarterbacks that spend their entire season and get Super Bowls like Favre and Rodgers and everybody before them? It seems like the Packers always seem to get a really good quarterback, and the Bears just can't seem to do it. And if we do, we usually trade him away before he really finds his stride. So it's going to be different, right? It's going to be different. Next year is going to be different for the Bears. Steven, I usually start doing micros if I see that the market is higher volatility. That's a good thing also. Snowflake, hello and welcome for that typo. No problem. 5 micros is half a mini. Your good idea to cut your leverage in half if you have a cushion in your account big enough to sling the mini around. Packers have great quarterbacks. The Bears have great linebackers, right? Yeah, Hagel matters. Everybody remember Jim McMahon. He was a nut, but man, what a year they had. That was the 85-86 season. Yes. He was, but he was, he only was around for 3 years. They traded him away, and then he didn't really do all that much, it seems. But he was a very exciting quarterback when he was hot here in Chicago. You guys remember the Super Bowl shuffle? Yep, the Super Bowl shuffle. Yep. You can still see it like on YouTube now. The production on that is really bad, but they were so cute. But what a great team. They were a lot of fun to watch. That was my first year bartending, was in 85. Yeah, I attended bar for a long time. And I kind of miss it. It was a lot of fun. It was a great place. If you're ever in Chicago, check out the Half Shell on Diversey at Orchard, 767 West Diversey. It's a little seafood dive, family owned since it opened. Fantastic place. Anyway, that's where I attended bar. All right, I've been yammering enough. The refrigerator, yep. William Perry, the fridge. What was it? Dan Hampton used to call him Biscuit because he was only a biscuit away from 350. I have all my levels carefully marked to range on the ES, so it's guaranteed to break out and run instead. Isn't it funny how the market loves to make liars out of us, right? Diggable Seeker, I'm sure you, sir, I probably did. If you were there, 85 to about 92, 93. The Bears. It's a little team from a little town that starts with a C, ends with an O, and in the middle is Hickog. Let's get into the charts, shall we? All right, starting with the E-mini S&Ps. We got crude oil open already. Looks like we are set to take a look. Bobby Douglas. Wow. Boy, you're really reaching back now, Rue. Holy cow. All right. Short time frame structure is to the downside. This is not a shadow. That's our measured move from our head and shoulders, if we can get there. So 2 weeks ago, last week, we had a couple of decent down days. Open interest indicates new sellers came in on Friday. Now we're still holding some open interest in the December contract, which is going to settle in cash today. We're probably going to lose about 500,000 contracts. 500,000 contracts are going to just settle in cash. Nothing to worry about. No, we're not going to leave the S&Ps as a contract. So with 35,000 open interest increase on Friday, it's indicating that the downside auction is gaining a little bit of health, right? So we got weekly kickoff low, 38.30 just below. It's kind of a target-rich environment. We've got 38.44, the 20% level, 38.30 weekly kickoff level, last week's low kind of approaching that area. This is going to be kind of a target-rich environment for us this week if price does advertise at those levels. So the head and shoulders measured move has us down to about 37.60 approximately. Nothing is finite in futures trading. Everything is a zone, right? And I see Jimmy Decker, Dick Butkus. He was just a big, mean, grind you into the ground linebacker. He was the best, wasn't he? I love watching old videos of him on YouTube. I turned my son on to him. My son was like, geez, he would have been flagged all over the place these days, right? So anyways, the head and shoulders measured move has us down here. The longer time frame trade is to the downside. We're all well aware of where we are as far as the longest time frame, or at least I hope we are. We had a pretty decent short time frames to medium time frame upside move. We are now we've broken that. We have a technical pattern that has us down to this level. I think there's still some question as to whether we're going to get through weekly kickoff low. Right now, we are inside the extended trading hour and regular trading hour range from Friday. Here's the 30-minute chart. No overnight inventory. Let's spread this out a little bit so we can see what we're looking at. So here's that target-rich environment we were looking at on the daily chart. Last week's low, maybe a little bit lower than that. Here we go. Let's adjust that. 38.30 weekly kickoff low, loosely based on a naked point of control, naked volume point of control that's off the chart here, but remains unchecked. The red line is that 20% level. It's not going to be supportive. I just put those on there so that I know where we are with relation to the all-time high. We're in range, we're in value, we're inside yesterday's, or I should say Friday's range. I'm going to have to try and stay patient today. I'm going to look for opportunities as the market finishes the initial balance. That may be something we need to look at. We don't have anything huge coming out today as far as economic numbers. The only thing we have is housing market index, which may or may not be impactful depending on how it comes out. We all know that we're kind of suspect as housing may be the next thing to try to kind of come apart on us, but we have to wait and see, right? So this morning, as far as I'm concerned, we've got low excess on the low yesterday. We've been kind of for 2 days B-shaped profile, which should mean long liquidation and lower open interest, but we've now seen higher open interest yesterday or Friday. It's indicating there may be more to this downside than has been presented to us yet. We also have excess at the high, low, excess, low. Excess at the high, very low, excess, low. So if we were to look at these profiles, I would have to say that what the market is telling us through these profiles is that the downside move is maybe not over. It seems as though we got a little bit too short on Friday, and we had a nice pullback off that and closed relatively well. Settlement was 38.79, right about here. So I'm going to be cautiously looking for opportunities to sell strength. Sell strength. So 73, the Dolphins had a perfect season. And I was a big Dolphins fan, and I just remember Larry Zonka, was a fullback or a running back, and he would just bowl guys over and carry piles of people down the field. He was always one of my favorite players when I was a kid. I think I have a third grade picture with a Dolphins jersey on. All right. Here's a crude. Longer time frame to the downside. Medium time frame to the downside. Short time frame to the downside. We've had some really good pullbacks. This is looking almost like a bull flag. Are we going to break this bull flag and get another test of this trend line, which does have 1, 2, 3 points of contact on it? So it's those 3 points of contact actually create the trend line, and we're going to maybe get an opportunity to see the weekly kickoff high here shortly, which is 76.65. And if we get above that, we may get another test of this trend line. If we break this trend line, that's going to break the downside market state that we've got in medium time frame, which would give us license to look to advertise price higher. We know that the White House has said that they're going to start refilling the Strategic Petroleum Reserve at $70. Well, they put the floor in last week. It's going to be a tough nut to get down through that level. Here's the 30-minute chart. Okay, well, look what we're doing now. We have 1, 2, 3 points of contact. We've broken out above this trend line, and we are making fast run towards the weekly kickoff high, which might be another interesting opportunity for an execution. Acceptance above this, we go long. Rejection above this, we come back to short. Acceptance above this, we go long. It's just two levels that allow us to limit risk in either direction. Here's the TPO chart. Long liquidation on Fridays takes selling power out of the marketplace. I would probably suffice to say that we've got our opening range at the low of the regular trading hour session. It should be on here. Well, I'm not going to be able to put that up. This is the 1 minute chart. So 8 o'clock, we have the opening range, the low of the regular trading hour session. We break out above that trend line and we see if we can continue, but that's a pretty substantial move. The opening range, high to low, 16 ticks. 16 ticks. Where are we now if we were to get out? We are at, let's call it 30 to 90. We're at 60 ticks. Opening range provided a pretty decent opportunity here. We should have been looking at that instead of gabbing. I'm kind of in holiday mode already, though. Sorry about that. Right. The NASDAQ, very similar to the S&P. Similar yet, but different. Short time frame structure to the downside. We know that. We've got the head and shoulders. The measured move for the NASDAQ is down here at about 10,800. We lost 93 estimated open interest. Open interest on Friday was inert. for the NASDAQ. We've got about 75,000 contracts left in the December contract to settle in cash. Don't freak out when you see the open interest drop that much. That's about the only time I'm going to focus on only the front month, which will be, of course, March. Take a look at the TPO. So again, long liquidation, much more excess at the highs than at the lows. We're low excess lows. Looking at the S&Ps, you could say that we added open interest on the push to the downside on Friday, which would indicate a healthier downside auction than the NASDAQ. But again, we're in range, inside extended and regular trading hour range from Friday. Try and stay patient. Gold. Balance. Price. Central in location. Short time frame controlled. Eye on the US dollar if that's going to be of any help. Balance rules apply, but we're so far from the extremes of this area of balance that I'm cautious to do anything for the first hour until after the initial balance is formed. We lost 1,300 in open interest off the low yesterday. Well, we probably got a few folks trapped on Thursday, and they got out by the end of the day on Friday. Here's the 30-minute chart. Settlement, 1820 cents. Put that on your charts. Looked like for a while there we may open with a gap. Overnight inventory has now been adjusted. We opened here, we're trading here. Nothing really to push me into an early trade here. Remember, we are centrally located between last week's high, last week's low. Whoops, messed that up. Hang on, 1730. All right, close enough for rock and roll. So we're centrally located here. I'm going to squeeze this a little bit more. Last week's high, last week's low. Weekly kickoff high, weekly kickoff high, weekly kickoff low. We're right in the middle. It's kind of like when we talk about the little tennis player. If this were a court and this was the middle, okay, the net is over here, the tennis player is going to go back to the center of the court so that when the ball is volleyed back to him over here or over here, he has easier access to it. Balance rules, we're far from the extremes of balance in medium or short time frames. So try and stay patient. Let the market give you early references for opportunities just so you can limit risk. Here's the euro. Expiring today is the December contract. We lost 4,400 in open interest on this break below this trend line. That's not healthy for a breakout. That is a weak type of way to break out of a trend. 1, 2, 3, almost 4 points of contact. This should have been more important than that. But again, it does represent a potential market state break. It's step one. Step two would be acceptance below weekly kickoff low, which is 1.0600. 1.0600 is weekly kickoff low. Well, we've got last week's low in the area. This is a target-rich environment. This is a target-rich environment. And this trend line may be a target-rich environment. The only reason I call them target-rich environments is because they allow me to limit risk on any execution in either direction. Here's the 30. Well, where are we? Where do we open? Down here a little bit. Are we holding some overnight longs, but we're in range and in value? Patience, my friends, patience. 1, 2, 3, 4 balancing days, pretty much. Focus on the extremes, or wait until the market gives you day time frame reference with which to enter the marketplace. The first hour of trade for me has always been difficult. It's less and less difficult the longer I do this. But when I first started, the first hour was brutal. What about the 10-year? Same. Central. Last week's high, last week's low. Area of balance. Extreme. We're far from those extremes. We lost 52,000 in open interest on Friday. There's no rollover involved here, so that's an actual loss in open interest. Well, we see a lot of traders just kind of getting out for the year. Maybe they're hedged. Maybe they're just getting out of some of their positions. But again, I'm going to focus on IBs, initial balances, when the market is like this, and put my main focus on balance rules. Down here near the lows, we look for longs. Up here near the highs, we look for shorts until proven wrong. Proven wrong is when the market accepts outside of the area of balance. You can look at this on a daily chart. You can look at this on a 30-minute chart. You can find areas of balance on a 5-minute chart that work the same way. Here's the TPO chart. Weak lows, weak highs, just kind of directionless wandering, centrally located, obvious area of balance low here, area of balance high up here. It's going to be interesting and challenging trading day and week, I think, for those in the treasuries. Here's the natural gas. We went from a potential island low to a potential island top. We lost 2,800 in open interest. This market is in rollover and rolls on Friday. The weekly kickoff low is in play for us today. Let's take a look at the 30. So when I look at an island top or an island bottom, I'm looking at regular trading hour session ranges only. The market did give a stab down to what is last week's low, but it was, very low volume, very low time. It was rejected. So now we've got a gap to last week's range and a gap away from last week's range. Already the market is attempting to test down to weekly kickoff low, which could be supportive. If not, if we continue to hold this as an island top, we get opportunities at the extreme of this week's high, anything that we can kind of lean on to limit risk. I think the play is work the short side until proven wrong, and that proving it wrong is going to be all the way up and a gap close from Friday to whatever day trades up there in regular trading hours. Here's the TPO chart. So there's the gap and the gap. Weak high. Not a very strong high here either. I mean, the highs were not very high excess, but then neither really were the lows. What is it? It's 10 degrees here in Chicago. And natural gas gaps lower. I wish that I could explain that, but I can't. Aqua Velva, baby. Electric shave. Fred, look up Zonka's Hall of Fame induction speech. He tells a funny story about facing Dick Butkus when Zonka was a rookie. I'll have to check that out. I'm sure it's on YouTube. Talks about gas cap price in EU. Thank you, Caesar. Thank you. Still doesn't seem to make sense to me. Right now, I'm just hoping that my furnace makes it through the winter. thinking about replacing it. It's 22, 23 years old. Hopefully it's going to make it. Otherwise, we'll have a panic installation. -4, -4 an hour outside of Anchorage. I feel you. Yeah, we've got quite the deep freeze coming from up there, Alaska and Canada. Opportunity might be diminishing, but it's fun to hang out at the market forecast. Well, I appreciate that. Going to freeze this week here in Texas. Say it ain't so, man. And I got some friends that are on the border of Missouri and Arkansas, and they're in the 30s this morning, I think. So it's coming. I wasn't ready for it, but I never am. Seems the older I get, the more difficult it is to deal with the cold. It hurts a little more every year. Anyways, let's take our deep breath and be ready for the trading day today. Stay humble, grateful, creative, and centered. Have a good trading day. I will see you for the recap today. Looking forward to seeing everybody. And again, hopefully you have a good trading day. Get out there, start from zero. Every trade is different. And get out there and profit today. Trade well. Stay in your process. Stay in your strategy. If you start getting angry or emotional, you're at risk. You're at risk. So have a great trading day. I'll see you at 3 o'clock for the market recap. Bye now.